Welcome back to Beyond Forex YouTube channel. So today I'm going to explain you more about in detail about the I have discussed in my first lesson. So this is real entry model which is called fair value gap. Otherwise, it is called FVG. Okay, I am now here in gold channel, gold versus USD. I am moving to the other one, GBP USD, which is my favorite. So I will tell you how do we get. I will delete all of these drawings. So I will tell you. I will explain you in detail how do we get a fair value gap. How do we identify a valid fair value gap, and how do we place the stop loss, and how do we place the take profit, right? And also I am slightly discuss here about the risk rewards. So this is very important entry model using FVG. So I will explain first what is FVG, right? What is FVG? FVG is fair value gap. Okay. To identify fair value gap, there should be three candles. One is this one. Okay. I know this already. You know these things. Okay. But some of you guys doesn't know about these things. So that's why I am gonna explain. So this will not be an additional. So listen, even though you know this. This is first candle, second candle, and third candle. So if we mark the higher one of this first candle, and if we mark the below of the third candle, this is called fair value gap. I will mark it, okay, like this. I will change the color, green. So this is fair value gap. I will show you another fair value gap. Same way, it is here. First candle, and third candle in between, right? Okay, this is another fair value gap, right? I will write for your convenience fair value gap. Okay, and I will write here also fair value gap. Okay, like this is also fair value gap. So how do we identify fair value gap which is valid FVG? How do we identify? For valid FVG, there must be either BOS, which is called break of structure, or there should be MSS, which is called market structure shift, right? This is also called Koch, change of character. It's the same. If we have either these or these with fair value gap, then that fair value gap will be definitely valid. Definitely mean at least it's valid more than 80%. It's valid more than 80%. That's why we need risk versus rewards ratio. Okay, that's why we need risk versus reward ratio. Okay, first now we'll see. In first lesson, I also teach you how this is identified, whether it is fair BOS or whether it is MSS. Okay, so again I will just slightly show you. This is lower high. This is another lower high. This is okay. This is another lower high, right? This is another lower high, right? Like that, this market was shifted from here, 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 like this. This market was going like this. This is real market of USD GBP, GBP USD. So you can see this one. So what is BOS mean? BOS mean the same site the chart is moving, right? But there is another higher high compared to this one. This is lower compared to this. So we can demarcate this one like this. This is called break of structure. I explained many things in my first lesson. If you have time or if you are interested, you can just watch what is BOS, what is MSS, and everything. So I guess you can understand. I guess you have watched my first video also. So this also BOS, right? Now I have marked here fair value gap, but this fair value gap above the BOS, so we cannot get the entry. But example, if you get an entry here, it will work out, but we don't. We should not, because the forex charts, forex market is unexpected. Sometimes this go this and it's come down here. Your account will be washed out. So we are not getting any chances of here. We cannot. Here there is no fair value gap. Let me see this one. Here there is a break of structure. Clear break of structure is there. Here there is a fair value gap, but at least this fair value gap should be covered. Entry should be from here, from this. Okay, we can mark here price alert. So then the chart comes here. You can receive a notification. But unfortunately, it's going like this, going like this, but it didn't hit here. It's come here and wait here. So there is no entry. From here to here, we cannot get entry from 1 hour chart, right? This, as I said earlier in my first lesson, 1 hour chart is, we can consider it as high time frame, HTF. Okay, so I will tell you why we are moving from high time frame to low time frame like 5 minutes. If you are using 1H chart, you need to go low time frame 5 minutes. If you are using 4 hour chart, you need to go 15 minutes lower time frame to take an entry. Why? Why? Nobody tell this one. Why? Nobody tell. I will tell you. I will tell you. Now I will get a good example for the fair value gap. We'll see. You guys and myself will see where there is a proper FVG we can get. Right? Okay. In this case, see, there's a nice FVG. Here we will mark the FVG, fair value gap. See, we will mark here, from here and to here. So this is our FVG. Where is our break of structure? From here to here, right? And also we have fair value gap from here to here. But it is not valid. See, it is not valid. It is above the break of structure. So we cannot get this one, right? So that this is rejected. Okay, this is rejected. We cannot get this. So now we are getting this fair value gap. We'll see whether there is a area that we can get a profit, right? Here there's a break of structure, right? Big one, break of structure, right? So we will mark the higher high here and the other high in between here we can get the higher from to here, okay, to here, like that. If we get this expandable to the support into the screen, we can get like this. So as I said in first lesson, we are getting the gang box here, from here to here, this gang box. It's coming, our order level coming below the 50% of this one, right? Below the 50%, that means this is exact turning point to a entry, to an entry, right? So where is our entry level? This one, we will demarcate this from here as our entry level. So I will put this green color mark. No, I will get this another color. So this is our entry level. So we can mark a long entry from here. Where is our stop loss? Where is our take profit? Okay, we'll see take profit. I'm not, this part we don't see. Yeah, we don't see this part. Okay, now we are in here, we don't see this part. Okay, so I will first mark the stop loss. This stop loss I need to mark here, right? Because our, this is lower low of this area, this time frame, this is lower low. I will mark the, like here, this is the, this is our take profit. Okay, I will delete this game box now. We don't want game box. Just a moment. Okay, I deleted. So this, till this we can get. So I will tell you something. This is the risk reward rate 1.8, right? That means there's a risk 0.18 to lose our capital. Now see this stop loss. This is very important part. Okay, see this one. This is related to fund management. Okay, so that this is very important. So see, this is what is the stop loss level, 1.26142. I will write here this one, that much of important, 1.26142. This is our entry, 1.26388. 1.26388. So if we get the difference, how much this? It's more than 250 pips, right? It's more than 250. Okay, so if you lost 250 pips, we lost. So people normally, they are investing funds in initial state $50 or $100. So they don't have capacity to risk this one. Okay, example, if you have a $50, you can take risk of 10%, right? You can get the risk of 10%. That means 5 USD should be your loss. In this case, again you can take the risk of 10%. If you are getting 10%, you can lose, you can be lost 10 times. Okay, like this. So 10% means 10 real, 10 US dollars in case of $100. So this is, difference is 250 pips. 250. If you put 0.10 lot size, how much you lose? 25 USD you will be lose. That means it's more than 10%. So that if you have not enough capital, you need to go to the one time frame, low time frame, right? How do we go? I will delete this one, and I will delete all, I will delete everything. Okay, I will mark only the fair value gap, right? There's a fair value gap, clean and clear, in 1 hour time frame. I will get this more, I will get this more, like that, right? Then I will go to the 5-minute time frame. Okay, now our fair value gap is here. We'll see the chart. Okay, this is the chart. We need to go now. Okay, chart is there. Okay, it's cross here, here. Okay, we are going okay. This is our fair value gaps in 1 hour time frame, but it's demarcated in 5 minutes time frame like this. Okay, now where is our entry point? It should be this fair value gap means we think in 1 hour time frame the price will go up, and sorry, this price will go up here and down here and hit here, and it will go like that. That is our expectation, hypothesis. So what we have to do, we need to find out another fair value gap either above or in same this colored area, right? So that should be also valid fair value gap. Let me see this one. Okay, we cannot get this one because this is from here, this is past, so we cannot. We need to get from here to here, right? So we, and also if you get from here to here, there's a break of structure, there's a fair value gap also here, but it's not hit, right? So that we need to find out proper fair value gap. Okay, in this case you can find proper fair value gap. I will take from this fair value gap. Okay, okay, like this. There's a nice fair value gap here that is coming inside the 1 hour candlestick chart fair value gap, right? So we'll mark our BOS. There's a break of structure, right? There's a break of structure here. Okay, so now we can validate this one. This is valid fair value gap. So we can get this one to this candle. Okay, it hits many times. First time this candle hit here. Okay, we are getting this profit from here. Okay, so this one, that is previously came the Fibonacci, so I will later explain you this one. So we can put here little bit more. Okay, and we can keep our, okay, our profit to here. That is 50% of this fair value gap. Okay, that is the profit, take profit area, 50% of this fair value. See the risk reward rate 4 to 1 to 4.28. So, and see now here the difference. I will show you now. This is now low time frame. Okay, see the difference. This entry point is 1.26420. See this one. Take stop loss 1.26351. What is the difference? What is the difference? This is this is exactly around under 20 pips like that. Previously it's more than that, right? Then you, if you have 100, let's say if you have 100 USD 100, then you can select the lot size 0.10. Your risk is 0.10 mean 10%. 10% of USD 100, USD 100 multiply 10%. It's coming how much? USD 10. So this is the different 120 pips. If you multiply this 120 pips into 10%, it's coming 12 USD. No problem, you can take lot size 10%. 10 lot size 0.10. So your entry start here and it will go here, and your, see, you can get the win rate from here, right? 4.28. You get 1 to 4.28. See how many, if you get two uh, entries per day. It's enough. You have to have full control. Okay. In another lesson, I will explain you about clear understanding of uh, how to get the proper stop loss, how to get the proper take profit. This both is very important. You cannot lose your profit, you cannot lose your 10% of risk. So this is very important thing. This is FVG plus FVG plus break of structure. You can get again FVG plus MSS, market structure shift. Okay, that is also there. In this case, in first video, I showed the break of structure and market structure shift also. What is the difference? I will again tell you. I will go to the 1 hour time frame just to show you what is market structure shift again. Okay, I, I will make a chart like this. Okay, this is your price line, higher high, lower high, higher high, lower high. It's going like this, and it's going down. Okay, so this is your break of structure. This is your break of structure, right? This is also break of structure. This is also break of structure. But see what happened? Price going down. So from here to here, what is this called? This is called market structure shift, MSS. In this case, if there is a fair value gap like this, you can take entry point here. Okay, short entry point. It's coming profit like this. This is all time high. Yeah, we are keeping little bit higher the stop loss. Okay, you can get the like this stop loss to this fair value gap. If there is a fair value gap, you can get this 50% of this, right? Same thing like BOS. This is the MSS. Okay, this is BOS, this is MSS, or else coach, change of character. Okay, see you in next third lesson in Beyond Forex YouTube channel. Have a nice trading day. Bye bye.